When we see a price fluctuate by almost $15,000, that means the market is getting better all the way around.
So welcome to another installment of Mortgage Minute. In a world where headlines kind of do more to terrify than clarify, Brian and I actually are here to provide some clarification on what's really going on in the news in the mortgage world. And so we're here offering kind of our insights to help people figure out how to navigate the mortgage world and hopefully buy a home without any of this fear and terrifying news that people have to navigate. Brian and I are both real estate professionals. I am a local realtor. Brian is a local lender. We serve the Denver metro area and surrounding areas. So today we're going to go over, as we always do, over a couple of real-time topics. Brian, I think you have 3 different things that you want to go over, starting, of course, with the Fed. And obviously that's a refrain we keep singing. It seems like on a weekly basis. But the Fed is controlling the economics and the economic world that we live in. And so right now, the mortgage world is following. And Brian, why don't you give us some clarification on kind of what happened, what the news is, and then we'll see if we can clarify to see if we can make sense of what's going on.
Yeah, so the interesting thing, and we've talked about this dozens of times, Matt, when the Fed raises rates, what happens with mortgage rates? So classic example. Yesterday, the Fed rose their rate again by another 25 basis points or 0.25%. The mortgage industry loved that, right? We already know that's going to happen. Everybody knows he's been talking about that, he being Jerome Powell. And so we've already taken that into consideration. But the one point I wanted to make right off the bat is, again, Fed rates don't have a direct impact with mortgage rates. So
right.
We
sometimes they go like this, right? But sometimes they go like this. They're just going the opposite direction.
They go in opposite directions more time than they go in the same direction. Yeah, that's a good point. So yesterday, kind of an interesting piece here. Jerome Powell is talking about the banking business being, quote, sound and resilient, end quote. And later on that day, there were 2, of these local banks or banking chains, whatever we call them, that are susceptible to the Fed talks and actions, and they lost their tails. There's one bank that lost 53% of its worth, and another one that lost 20-some% of its worth. Like it's shocking how the Fed is just analyzing things, and it's We've said this before. They've either got an agenda or they're just idiotic when it comes to what they're looking at. And I think one thing that would be helpful is if they put somebody in that position that's an actual economist and not a lawyer. So anyway, that's what's gone on here in the last 24 hours or so. It certainly helped us from a mortgage rate standpoint.
Okay, well, that's good news. Yeah. It's obviously, it seems like it's kind of mixed news because, again, no matter how many times we explain it, it is hard sometimes for people to feel calm and okay about the news that they're hearing when you're hearing one thing, but the market's going, ooh, we actually like that, and we're going to react favorably. So, Brian, you actually have a real life scenario that you wanted to share, which I think is really It's really illustrative, in my opinion, to be able to show like how much are people really saving when the rates fluctuate. And again, to clarify, we never go over specific rates here. And the reason, of course, is because, first of all, there's a website, and we can put that down below here. And second of all, rates always depend on somebody's personal qualifications and a number of factors, of course. But you have a real life scenario that you can kind of share with us that says, hey, this is what really somebody was able to save based on the fluctuation of the rates.
Yep. So I'm coaching everybody right now. And this is jumping forward a little bit, but our prediction is that mortgage rates are going to continue to fall, especially starting next week. So I'm not going to get into that. Maybe we'll talk about that next week. But May 10th is a date that we've had circled on our calendars for quite some time. It's a whole nother story. We don't have time for it today. But even just this week, with in conjunction with what the Fed's talking about, in conjunction with what ADP is talking about, as far as job creations and job losses and, all of these stats that show that the unemployment's starting to creep down a little bit. All of that taken into consideration. Here's what we looked at between Monday and today. Today's Thursday. So on Monday, we had a family go under contract on an $800,000 house. Perfect credit. I'll put a couple of pieces in here. Perfect credit, $800,000, 10% down. They went on Monday when we put the file together, 6.375 was costing 1.05%, which is about $7,560. Today, when I repriced it just a little bit earlier today, that same rate they got a credit of $7,344. So we've swung
Wow.
$14,904 in 4 days or 3.5 days. So, that's enough to
crazy.
get them a better rate. We always talk, this is way behind the scenes, but we talk about prices of mortgage, not necessarily rates.
Right.
Anybody can really have any rate that they want. It just depends on the price. So when we see a price fluctuate by almost $15,000, that means the market is getting better all the way around. So good news. I hope we can continue, down that path a little bit. I think it'll help, unlock. We've seen a huge influx in mortgage applications this week.
Have you?
Yeah. So it's been a welcome week. We've needed this for a minute. So
yeah, that's fantastic. Well, and again, it just shows how quickly things can change. While we never advocate waiting to time the market, because obviously you could think it's going to go one way, it goes the other way, and it works against you. But the reality is, if you're in the process of home buying, you're thinking about home buying, there can be weeks and days where things shift enough to literally save you, in that example, $14,000. Like that's tremendous. In a real life example. So,
yep.
Brian, and maybe my bad, I think we kind of skipped over, but you also mentioned that there was some very interesting data that had been shared. Was it from ADP?
Yeah, and it's just goofy how, right, this is a lot of the stuff, and I'm going to go back and pick on the Fed a little bit, which we've been doing a lot of lately, and I thought I'd turn that off. I guess I did. Part of the frustration with the Fed's reactions are just based on odd facts, is one way to put it, right? So I'm looking back at some of this job report numbers that have been not only affected mortgage prices, but certainly Fed actions. And we look at just serious volatility from ADP in the last 4 reports, and kind of analyzing some of that. Like, they've changed their methodology. In every report, it's a little bit different data that they're looking at to give all of this information. And luckily, that's not the only source out there for job information. There's a BLS report, which is the Bureau of Labor Statistics, that comes out tomorrow. But they're even worse. Like, it's just like a goofy, hey, we're going to just move the target a little bit, and here's all our data, so we're going to have the Fed react accordingly. Like, it's just, they've lost their minds, it feels like. So,
well, and I hate to beat a dead horse, but it's the exact reason why we're here to try to sort through these things, because what I know about statistics is that 83% of the time, the statistics are they're correct, right? So, and then the last time I told that story, I think it was 60% of the point is you can make statistics kind of tell whatever story you want to tell. And it seems like the Fed is telling an interesting story that doesn't necessarily, it does cause the markets to react, but it doesn't necessarily align with the numbers of what's being reported. So
not in terms of accuracy.
Very, very interesting. It's kind of like when you play a game with somebody and you kind of go, are you making this up as you go? It kind of feels like that.
It feels like that. Great.
Yeah, no, that's tough. Well, that's the story this week, Brian. I appreciate your insight. With that, we'll look to meet here in another week or two, Brian. I appreciate your time.
Sounds great. Good to see you as always.
Yeah, you too.